Welcome. How to execute trades like a robot, the ultimate guide to emotion-free trade execution by Trader Bastion. Why are robots successful traders? In the arena of trading, the market demands near perfection for trades to be consistently profitable over a long period of time, and robots are perfect in execution, even though they possess limits that are handled by their operator, human. The absence of emotions in robots makes the execution of trades flawless for them, since they follow every rule to the book without breaking them. Why are humans inherently bad at trading? The arena of trading is inimical to human nature. Firstly, we need to understand that humans are fundamentally controlled by two major pursuits, which is the avoidance of pain, fear, and the desire for pleasure, greed. In the market, these things that controls humans needs to be ignored, which takes practice. Fear is an enemy of a trader, and so is greed. A fearful trader misses out on great opportunities, and a greedy trader has all his money taken away from him by the market. So, an awareness of the undeniable human nature is an awakening call that can help us become the profitable trader we continually work towards becoming. How do we emulate robots in trade execution? In trading, profit is made in trade execution and not in the trade analysis. Any well-trained trader could analyze a price chart and guess a probable direction that lands on the right side of probability. But only an emotion-free trader can successfully execute several trades consistently over time to generate a profit. This is where the difference comes in. Money is made in the execution. So we must emulate the robots in our actions while executing. Rules that the robots follow. Robots only execute based on the close of a candle. So you see some humans executing when the candle is not yet closed, making a decision, maybe it is an engulfing pattern when the candle is not yet closed, and placing their trade. This is very, very poor. Robots execute only on the close of a candle because robots are patient. Mind you, a point is not added here. Robots only trade based on limit orders. Robots do not use instant execution. They trade based on limit orders. Either buy limit, sell limit, or a buy stop or a sell stop. Those are the orders that the robots trade based on. Robots do not move their stops. Robots do not move their stops to break even. Robots do not widen their stops just because the market is getting close to it. Robots do not do any of those things. Robots do not mourn over a losing trade. Once a robot loses a trade, it moves on to the next or stops trading if there is no opportunity left to trade. Robots do not mourn over a losing trade. Robots do not rejoice over a winning trade. Robots do not rejoice over a winning trade, because a winning trade can be as harmful as a losing trade, breeding overconfidence and complacency in a trader. Robots do not revenge trade. Yes, the robots do not attempt to get back at the market. Robots do not overtrade. Yes, the robots follow every rule to the book and they do not overtrade. Robots do not force trade. Yes, the robots do not force the charts and they just do what they are meant to do according to their rules. Robots used a fixed risk to reward system. Yes, robots are not greedy. They do not move their take profit, and they always trade based on a fixed risk to reward system. Robots always move on to the next trade. Emotional triggers. These are very important triggers to be recognized by a trader. We are all human and we are susceptible to our emotions. Recognizing emotional triggers is important because in the market, emotion do not mix well with money. So below are some of the rules to avoid emotional triggers. Never take more losses which are more than 2 in a day. After 2 losses, the human mind jumps into overdrive, and an uncontrollable emotional trigger that could lead to impulsiveness and poor decision making tends to happen. So define your rules, modify your trade strategy, and always make sure that you do not take more than 2 or 3 trades in a day, so you can cut your losses down to 2. Never risk more than you are willing to lose. Even the broker tells us this, but a lot of traders ignore this. When a trader risks what he is willing to lose, he will be willing to walk away from a losing trade, and this signifies progress. Always celebrate your losses and ignore your wins. Yes, if you followed your rules and it is a losing trade, it is not a losing trade, it is a lesson. Celebrate them. And if you have a winning trade, it is normal. Your strategy is already profitable, so what do you expect? It is normal for your strategy to give you a winning trade.